everyone. Welcome to another episode of Cryptocurrent. Your host here, Richard Carthon. And today I got a really special guest that has been doing amazing things in the financial realms for a long time, working on all kinds of amazing projects. Here to talk to us more about AbleMarkets, we have Irene Aldridge. How are you doing today?
Hi, Richard. I am thrilled to be here. I think it's so cool to be on a crypto podcast because this is a super new area for me anyway, but I think for a lot of other people too. Obviously, you've been in this for a while and so have a lot of other crypto guys. But I think it's amazing to see how crypto is coming of age. And in fact, JP Morgan announced today that they completed a trade, I think, in repo securities in crypto in their own coin system, which is like a major breakthrough for a traditional white shoe bank to adopt crypto to the point where they're actually trading it. But I know that there are also a lot of people still on the fence that are coming from traditional asset management because they're really afraid of a lot of fluctuations and they just don't necessarily understand what's going on. And frankly, like in at least in the past, there've been a lot of issues with like crypto being used for money laundering, whatever. So I think there's a lot of negativity still that crypto has to overcome. But the prospects are really great. I mean, with big banks really going into it, I think there's just no turning back. I think it's going to be an asset class that is at least as important as everything out there. And I think for that reason, like if you have not been doing crypto yet, of course you have, but you really should. So and coming from my background, as you mentioned, I've been around the block for a long time, and part of it is just natural curiosity. I was always interested in following what's new and exciting in the world. And part of it is also the industry has been changing a lot. My background is very, very technical. I'm an electrical engineer by training. And right, it is in the beginning, probably when I started, a lot of the finance was more qualitative. So there was obviously, to me, always potential to do more math in everything. But a lot of people saw math not necessarily important in that space because a lot of transactions were done more as a service. So people would arrange some custom security or custom this or custom payout, and then they would charge a hefty haircut for that, and they would make a lot of money on just doing something custom that did not require necessarily anything mathematical. But as the markets have been standardizing continuously with the help of technology over the last 20 years, we have more and more regularization in everything we do. So custom has been kind of going away, and or at least not in everything, but there's a lot more standardized stuff that people are trading.
Yeah. So even real quick on that, I just want to dive into a little bit more on your background, and thank you for opening up with that. I kind of want to unpack a couple of things. So first, let's go back to your background. You said you're an electrical engineer, and you kind of shifted into the financial world. Can you kind of talk to us about that journey? Like, how did you start to go in the path of the financial realm?
Sure. Well, in New York, you just can't avoid it, So I was going to college in New York, and I was a poor student, and you walk down the street and you see all this amazing capacity that people have, and they all work in finance, and it's just so exciting, and it's just you just breathe it in, and it kind of becomes part of who you are. So and at the same time, I mean, my technology background has always been very, very strong, but it's just in New York you just fall into it. It's like you kind of all the jobs that are offered to you, probably 75% of them have some financial focus. So you really can't get a true electrical engineering job in New York City, even if you tried, right? So, but now it's also different because there are social media companies that are there, and so they're recruiting heavily. But previously, there's just all been finance, and It's really kind of the dominant industry. I think today it's still a very dominant industry. So and of course it's very rewarding, right? And in terms of financially, if you are doing well in finance, you're probably doing very, very well for yourself. So and from that perspective, so after electrical engineering, I immediately went to study financial engineering. I went to Columbia, and at that time the programs were just beginning, and it was kind of very interesting, very different from field. And I went to do a PhD in the same in financial engineering. And PhD was not really well defined in that space yet. It was still more operations research and kind of like transportation problems and supply chain management, which was not, I really couldn't see it, how it would apply to finance. So I went to do an MBA. I took a year off. It was all I was allowed to take. And I went to INSEAD in France, which is 1 year program. And there I really got exposed to like traditional kind of MBA finance. So I switched and I went to do a PhD in finance instead. And throughout this time, probably with the exception of my MBA, I worked full time. And I enjoy working. I'm a complete workaholic. I can work 24/7 without any issues. So and that's what I do basically all the time. In finance PhD, it was very interesting because a lot of the problems that the finance PhD solves are really on kind of a micro level. So, for example, a question, okay, so if somebody releases earnings, like CEOs release earnings, do they manipulate earnings or not? You know, so it's a small kind of aspect of everything that's going on. But I'm always kind of more interested in the big picture, although this is very interesting. And there are also like different risk management problems that I leveraged into a lot of risk management work that I've done over my career. And I ran a loan quantification desk for a bank, and ultimately I moved to the trading floor. So and that's through, I went through research and basically every possible department. And it's interesting that my key takeaway though from the whole finance PhD, and I was really interested, like, how do you make money in finance? This was my main interest in doing this PhD. And so, but so you get bogged down in these, well, do they manipulate earnings or do they not manipulate earnings? And so just tell me, how do you make money? It was my key takeaway is basically to have money. That's what I wanted to figure out, is you have to make more money and spend less money. But in the process you can do a lot of math and obviously price things more precisely and stuff like that, which is very useful if you're doing any kind of arbitrage, which you're basically doing all the time in financial services. I think another interesting thing about finance is and standardization that's happening and is going to continue happening, is it allows us to price stuff more precisely. So in other industries, like if you look at groceries, like the example I like is you walk into a grocery store and you have like 20 different brands of tomato soup, right? And they're all priced differently. So some are priced $10 a can and some are like 60 cents a can. And they all, the guys who are pricing it at $10 a can, they're making an argument that their soup is better, right? So they're appealing to the fact that, look, I'm actually pricing this a lot because my soup is just so much more important. In finance, all the soup is basically very transparent and very much the same by now because regulations mandated. And I think even more so in crypto, because in crypto you have this ginormous paper trail and you can go back and basically verify all the different transactions. So I think from that perspective,
so real quick on that, like as we're kind of like going down that train of thought, one of the ways that I know that you've probably got into creating AbleMarkets, and as you're starting to look at all the various ways and kind of the discrepancies that you can find, as you were saying, with one of the things that I think is always really important is to try to find alpha, especially as a trader, and also try to find some ways just like you said with arbitrage, there's been a lot of opportunities for arbitrage through the various trading platforms and the crypto markets and other things like that. But how did you get to a point where you decided, okay, I want to go and create this platform, AbleMarkets, that can help a lot of traders find some of these opportunities and start to capitalize on them, like you said, to make money?
Sure. Oh, we were totally demand driven. So we didn't consciously set out to create the platform before. A client of ours, we had a trading company, and the client of ours, it was a crisis, 2009. So they came to us and I said, listen, we don't want to give you money to invest because we think it's too risky, but we're just going to buy your data and we're going to invest it ourselves based on your signals. So I said, fine, you will pay us, that's great. And this basically evolved from there. So, once you find one client doing something, then you find the next client who's kind of with the same interests, and you grow kind of organically that way. So there's just not really, that's basically it. But I think the problem is universal. So you have you want to make money, and in financial markets, as you said, you want to identify alpha, which is your source of uncorrelated returns, right? So it's basically the extra return that you would get on top of traditional stuff, like payment per unit risk, right? So that's beta, right? So when you take extra risk and then you're rewarded with a certain return, that's your beta. Alpha is something that's uncorrelated with anything that so it's kind of an extra bonus, and that's what's really hard to find. So and I think in crypto, there's plenty of that left still, because the technology is so new, and frankly, there's a lot of stuff still to explore. I think it's there are a lot of inefficiencies that people have not even thought about yet that are completely legit. It's just whether they're in microstructure, which means that the study of every tiny movement in the market, which I've done quite a bit, and which is very interesting, I think. Or it's really the way, as you said, different platforms are working, and whether there is some discrepancies between those that actually generate some mispricings. It's also possible. But I think the answer to the best way to identify all this does lie in technology. Because part of it is, we live in this new world where there's so much data. You have the crypto. How many platforms are there now that actually offer crypto or trade crypto?
A lot. There's plenty of platforms you can go and get from all over the world.
Right. So each of these platforms is a little bit different, and there's just so much information that they're providing to everybody, and it used to be that a financial analyst really only had to deal with a very small time series, because I'm going way back when to the maybe 50 years ago, but you had all your quotes were in the newspaper, right? So you would subscribe to the Wall Street Journal because they'd have these massive tables and where all the securities were listed, and you would have open, high, low, close, and volume for each stock, and it's on a daily basis, and that's all people had. People didn't even record intraday data because they thought it was a complete waste of storage space. And frankly, it was too expensive to store all that data. So right now we have much less expensive storage where we can store all this data. We have much less expensive technology with which we can process all this data. So there's really a lot of opportunity in managing the data effectively and producing a lot of money that people previously left on the table because they just didn't know what to do about it.
So on that, you bring up a lot of really good points on the fact that, from an institutional standpoint, or even from your financial, traditional finance world, you're starting to see a lot of traditional money starting to pour and institutional money pour into the crypto markets. Just like you said, we had PayPal that recently announced, they're largely coming in. You have a ton of portfolios. I believe we had an insurance company that allocated recently $100 million towards Bitcoin and are planning on adding more in the future. And more and more and more of this money starting to pour into it. As of today, of this recording, Bitcoin has broken its all-time high of over 20,000. Who knows where it's going to be by the time this comes out and you're listening to this? But it seems that crypto is becoming more and more legitimized. Where do you see crypto headed? And as institutional players are starting to look at this, some of these different strategies that you just talked about, like what are all of the different ways that crypto can continue to evolve from a financial standpoint?
Well, this is just my perspective. So, it's I'm not sure, but
no financial advice. No worry about that. Yep, you all get on that. But, this is not financial advice.
Sure. Yes, but I think it's definitely becoming a legitimate asset class in terms of like on par with equities and everything else. In fact, there may be some kind of synergies between equities and crypto. It's possible. I mean, I know there are some problems with like trading equities on blockchain, for example, because how do you short a stock? Like how do you sell a stock and then how do you charge interest for it? But maybe people are able to resolve it. So, or maybe they have resolved it already. So it's really, but I think crypto has a great potential. And blockchain is definitely a very legitimate technology. It's very solid. But crypto as an asset class, I think it's really becoming more of a thing. So maybe in 10 years, probably not 5 years, but in 10 years, we'll probably pay with crypto at the grocery store, at the local grocery store. And maybe it will be the world currency, and it's basically what we'll use, right? Just like any other currency that we use today. But I think the key to success in really investing crypto lies with big data. And if I may plug my new book that I've just co-authored, it's called Big Data Science in Finance. It's co-authored with Professor Marco Avellaneda of Wiley. But in it, we have crypto applications specifically, which are built on daily crypto data. But you can see just how much you can do with applying big data techniques to even the crypto market, with and how much you can improve the performance in your portfolio by managing data more effectively. And I think is there's more and more people adopt, or more and more portfolio managers adopt these big data techniques. They'll be able to, one, more successfully manage the risks of crypto. And right now you have sometimes these wild oscillations that scare a lot of people away. But it doesn't have to be like that, right? So you can actually manage it more effectively and achieve pretty smooth return. Also without sacrificing the upside, and even improve the upside in many cases. So, but I think it's really it's possibly will become the standard, and I can totally see that happening. So, go ahead. Sorry.
No, I was just gonna say on that, like what I think is more and more interesting is, in the last 3 years or so, you saw a lot of these hedge fund managers and prolific people in the space, specifically speaking, Warren Buffett, who basically said there's no value in crypto and all this other kind of stuff. And we're starting to see a shift kind of in the other direction. Do you think that, it's a more viable option, or will continue to be? Do you still think it's highly speculative? Like, where do you think the world is going as far as being able to treat this as a viable option versus continue to be highly speculative?
Yeah, I think it is definitely a viable option. I think JP Morgan is JP Morgan is also a leader in innovation, and they like to try all the new technologies, but they're also very risk averse. I mean, and besides, the CEO of JP Morgan is big friends with Warren Buffett. So I can see Warren Buffett changing his mind pretty soon. But look, people change their minds. They're not. It's always happens. So I think we're at a kind of inflection point in crypto where it's really to the point where people reassess their previous opinions, and I mean their opinions largely were based on 2018, where market just tanked, crypto market tanked, and part of the reason why I think crypto market tanked was, I mean, a lot of people, crypto is kind of a wild west, right? It's sort of a currency that's not really regulated right now. although none of the currencies are really regulated, right? So if you look at any other world currencies, they're very lightly regulated, if anything. So, but crypto is even like it's faster, and it's just very, very new, and so you can say that like, or if you look at countries like Venezuela, apparently a lot of people in Venezuela use crypto because they can't really get access to the US dollars, or they can't move money out of the country otherwise, right? So there's a lot of that going on. But at the same time, I think, so anyway, so in 2018, there was this crash, which definitely scared a lot of people away. So, but now it's coming back, and it's coming back full force. And of course, but I think my point is, I think over the last 2 years, people have had a lot of time to think about, how they would mitigate the risk if the crash were again to occur. And what you had in 2017, for example, you had these like massive conferences of people who just had a little bit of money saved, and they would go to these crypto conferences, and they would just pour all their money into crypto, right? And without any background on what was going on. So it's not that different from the 1920s in the equities market, like 100 years ago, when there were a lot of widows and orphans who had saved a little bit of money, and then they just saw the stock market that was very new at the time just go up and up and up, and then the market crashed and they lost everything, right? And then we had Security and Exchange Commission created to protect widows and orphans, and et cetera. So I think a lot of people got burned in this crypto business too. I personally know people who, they also got burned, but in a different way. They invested into crypto, and then they had this Bitcoin, and all of a sudden they had no Bitcoin, and they could never figure out what happened to that Bitcoin, right? So it just left. So all of these stories, they kind of give people a pause, and they just think, well, maybe it's not the right time yet. But if the company, like the brand like JP Morgan, goes behind it and said, look, this is our product, this is our whatever JP coin, whatever they call it, maybe it's worth actually our money, because if anything, we can sue JP Morgan and get our money back. So I think I think it's exciting. I think it's truly an exciting time. And I think this time it's definitely, we're making real progress towards a more institutionalized Bitcoin than ever before.
Yeah.
And so go ahead.
No, I was going to say, if you had you can wrap up your thought on that if you would like to. But I mean, other than that, I was just going to say, like, I agree. I think there's a lot of reasons why the difference of what happened in the last crash versus now, why there's a lot more stabilization. There's a lot more proof in the pudding, right? So like from the ebbs and flows, like it's been, it's proven the test of time. You're seeing a lot of the other cryptos outside of just Bitcoin as well, who are building projects and are showing their use cases for real world use cases. And you're also starting to see projects that are trying to materially improve upon the world that's borderless. Like the fact that everything is so borderless in crypto makes it a lot more appealing, and makes it to where, just like you said, you can move faster, you can get things done. Where in the world can you go where your dollar's a dollar? You can't. But a Bitcoin is a Bitcoin wherever you go, and Ethereum is Ethereum wherever you go. And that's powerful, and that's why you're also starting to see a lot of governments, create CBDCs, which is basically centralized banking, digital currencies. And so I think that trend potentially will continue. But I do want to say I really do appreciate you spending some time with us today and sharing some of the knowledge that you have. But what is the final thought that you want to leave with all of our listeners here today?
Well, my final thought is always about how you can apply the latest technology to any given problem. And right now I'm obsessed with big data. I'm absolutely obsessed with it. And I think we're just scratching the surface of how much you can do with data in like with crypto. I think it's just there's just so much enormous potential in that world. So and I think very little of it has been done yet. And part of it is because like traditional institutions, academic institutions, they have not yet embraced, they have not yet realized, for example, that crypto is here and now, and you really have to devote like PhD kind of studies towards crypto. So there's not enough research, way a little research but I think the potential is insane, and I'm very interested in studying it, and that's why we wrote the book. But I hope it's really continuous, and we should see the fruits very, very soon.
No doubt. Well, I really do appreciate that. What are some ways that people can connect with you and learn more about AbleMarkets, and also learn about your book that you just released?
Sure. Well, I'm on Twitter. It's Irene Aldridge, one word. And I'm also on LinkedIn. And our book is going to have its own website. It is bigdatascienceinfinance.com. And it's also on Amazon. It's supposed to be shipping later this month. So I'm very excited about it.
Awesome. Well, again, Irene, really appreciate you spending some time with us today. And for everyone listening, stay cryptocurrent. Hey, cryptocurrent crew, you asked and we delivered. We have received multiple requests for access to cool crypto and blockchain projects that you could use immediately. Well, we have recently launched our partnerships page. If you go to our website and go to the partnerships tab, you'll be able to see multiple companies that have partnered with us to not only give you access to the cool products that they have to offer, but then also give you cool discounts to get started today. So please go to our website, go to the partnerships tab, and check out the various partners that we have today. Hey everyone, I hope you enjoyed today's episode. For more information on today's episode and all of our episodes, please visit us at www.crypto-current.co. You can also find a link in the show notes. Want to stay up to date in the latest news in cryptocurrency? Sign up for our newsletter today. You'll receive daily emails Monday through Friday that are personalized and curated content specific to you and your interest, powered by artificial intelligence. You can either go to our show notes or go to our website to sign up today. Are you an accredited investor looking to invest in cryptocurrency? Crescent City Capital can help. Go to crescentcitycapital.com for more information. I don't know if you've noticed, but the quality of our podcast each week are improving. I can only thank my amazing producer, Andrew DeRitter with DeRitter Productions, who has been putting all of this together. If you have any podcast, music, or audio needs, please go to DeRitterProductions.com. That's DERITTER Productions.com.
Thanks for tuning in to another episode of Cryptocurrent with Richard Carthon. We'll be back with more exciting developments from the world of blockchain and cryptocurrency next week. But until then, stay cryptocurrent.